Hey folks, Dan Frio here with your opening bell for July 18th, 2025. So the news that we're going to go over today is we have Fed official Waller. He's coming in saying we need to cut rates at the next meeting. So we're going to focus in on that in a second. Then we're going to go over to housing starts. Housing starts just blew out the numbers. We're also going to focus in on corporate earnings. How are they? Are they doing really bad because of tariffs? Or are they actually faring pretty well? That's what we're going to discuss in today's report. And we're going to explain how those affect these things over through here. So folks, my name is Dan Frio. I do this report twice a day to inform you guys what's going on with these over here and the whys behind it, folks. The reason why I do this, I'm actually a federally licensed mortgage loan officer. What that means is I'm licensed in all 50 states as well as Puerto Rico. So if you're out there and you need assistance with a mortgage, I'd love to help you. Our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how in the world could we do that? I'll give you all that details at the end of this video. You're here for these. So let's get to it. So here's what we're seeing in the news today. We have Fed official Waller. He sits on the Federal Reserve. Now, he's one of the candidates that the president is maybe targeting to be the next Fed official. Here's what he's saying down through here. He's saying that the Federal Reserve at the next meeting he argues that the Fed policy rate should be 3%, which is 125 to 150 basis points higher than where it is, okay? Or lower than where it is. So 125 to 150 basis points, what that means is 1.25% to 1.5%. So quite a bit of a drop there. Let me explain it to you how it works. So here's what the Federal Reserve monitors, okay? They look at inflation numbers, they look at the unemployment numbers, and they also focus on GDP. But here's the rate that they control. Well, here's what Waller's saying. He's saying, well, inflation, let's say inflation's on the high end. It's at 3%. So this federal funds rate should be pretty much equal to what the PCE or the inflation rate is. Well, it's not. It's way inflated. So that's why he's saying there could be at least 125, maybe 150 basis points pulled out of here and still not affect the market because we're still not with that equilibrium point of where inflation is or what the number they track is. So that's what he's saying. He says, if we track inflation by the PCE and it's 2.3 and we're holding our rate at 4.25, it's way inflated. And that is what creates this thing over here. Now, this is the yield curve. This is how interest rates work. And here, how it should work, it looks something like this. Let's go back in time a little bit. And here's what's called the yield curve. And you might hear people say, well, there's an inverted yield curve and the yield curve is flattening and so forth. But here's what a yield curve should look like. Okay. In the front end, meaning short-term maturities, if you're looking at a 1 month or 2 month investment, you should get really low returns because you're only holding up your money for a short duration of time. As you go on in time, you should get higher and higher returns. Well, here's the problem. If you go over to this and see what the yield curve looks like today, it's up here. And this is higher than where we are in the 7-year bond market. So the Fed and everybody's saying, Fed, you need to drop this considerably down to here to at least flatten this thing out and make it a normal yield curve. So that's his argument there. And I'd have to say I would agree with it. Even if the tariffs come in at the high end, we're not going to see a 1 to 1.5% increase in inflation that I know of. And no economist is saying we are. Okay, so let's get to the next piece of the puzzle. We're here seeing housing starts. It just went crazy. I'm going to show you some numbers here in a second on this, but we also are going to look at earnings returns or earnings reports because we want to focus in on how are tariffs affecting corporate earnings, because if corporate earnings start to go down, well, they're going to have layoffs and they're going to have price cuts and they're going to have all this stuff that's going to be detrimental to the economy. So let's just take a quick peek of where earnings came in this week. So we're going to go over to this week's earnings on the earnings hub, and let's just start what we saw yesterday. So on Thursday, here's all the companies that came out with earnings. Let's just go over to here and see what they look like. So if we go across the top, we're just going to hit the top 5 or whatever all these are. You look at this one is up 2.22%. So that is, well, let me hold on. I think that says 4.22%. Yep, 4.22% there increase. This one 4.43. This one 17.73. Now this is its earnings per share increase. Okay, then you go down through here, 0.8, 1.87. There is only one on this whole list that came in negative yesterday. Let's look at the day before. We had J&J, Schwab, a lot of the financials. Let's look at this one. Up 12, up 3, up 13, up 2, up 7, up 13. This is why people are buying stocks, folks, and they're not buying bonds and a lot of other things because a lot of corporate earnings that they thought was going to get crushed with tariffs and the economy and everything are looking so far so good. So that's what we've seen so far over through there. Now let's get to the economic calendar so I can break all this down for you so you can see it visually. So here's what we got for today. The only thing we got on Friday was building permits and housing starts came out so far. Let's look at the numbers. Building permits, 1.39 million prior, 1.39 expected, came in right at point. Now here's where it really gets interesting. Housing starts, last reading was minus 10%. Minus 10. It now went up to plus 4.6. So let's say it went from a negative 10 to a positive 5. That's a 15-point increase. That's a major jump in housing starts month over month. Housing starts June is 1.32 million, expected 1.29 million. So quite a bit of an increase here. So it looks like even though builder sentiment is way down, looks like they're starting to build some more homes. What they need to build is more affordable homes, not these mini mansions that has 4 bedrooms, 3 baths, 4-car garage. You need it for starter homes, folks, and that's what the builders need to do at that time. Now let's get over and see what these numbers are, how they're affecting the markets. Let's see if we have another Cinderella story for us today, folks. But when I say Cinderella story, what I mean is the indices are up, mortgage rates are down, yields are down on bonds, oil's down, and cryptocurrency's up. That's my thought on a Cinderella story. So let's get over to it. We have the Dow Jones all the way across the board right through here. They're up, and I think the S&P just might have hit another record high. We got oil up to $68 a barrel. It was $66 yesterday. We don't like this. We need this at 65 or below. The question is why? Well, this is a huge piece of inflation. So if this number goes to 70, 75, you're going to see inflation ticking up, and that's going to spook the markets. So we need to keep control over oil. In this area here, you can see the bond market is down just a little bit. Let's go see what cryptocurrency is doing. It's down to 118. What happened yesterday? There was a crypto bill that passed legislation. It'll be signed by the president, I think, today or tomorrow. So you're going to most likely see these indices up across the board. Look, Ethereum's up 5. You might want to look at Ethereum, folks, and we'll talk about that next week on Stock Talk Tuesday. And then all the cryptocurrencies across the board are up and away. But what are you here for? You're here for these things. So here's what's going on in the bond market, folks. Right now, today, the news that we have based on the headlines that I went over, we have the MBS market up 13 ticks. So let me explain to you how this works. So if you're new to the channel, here's how we focus in on mortgage rates. A lot of people focus in, even if you watch mainstream media, they're going to say, well, watch the 10-year Treasury, and if it's going down, mortgage rates are going to go down. Well, that's kind of accurate, but if you want to really get accurate, well, watch my channel on a daily basis or focus in on the MBS market. This is a mortgage bond that trades on Wall Street. The yield on this thing is the biggest component of your mortgage rate. So if you follow this bond, you'll know what's going on. So how you focus in on this is if the bond price is going up like we've seen earlier today, and then it took a little bit of a blip there, but it's coming back. If the price is going up, that's great news. Prices go up, yields come down. Okay, prices up, yields down. So if prices go down, yields are going to be up. What I mean by yields? Rates. So if this rallies up, that means mortgage rates are getting better. A 12 tick, we'll pull out a little bit on this. So we'll be at 6.8 today, maybe a little bit lower. So if you're out there looking to buy or refinance, I'd love to be able to help you. First thing I want to talk about to you guys, the next thing is before you go out and have somebody pull your credit, this is my public service announcement. Please do this. Okay, what this is going to do is stop the credit agencies from selling your data. They're called trigger leads. So if you want to stop those from being done, here's what happens is when you're out shopping for a car or a home loan, if the bank or lender pulls your credit for that purpose, the credit agencies have the ability to sell your data. If you want to stop that from happening, go to this website. They created this thing to basically you tell them to stop selling my data. So what happens also with this is when we pull your credit, you're probably going to get 20, 30, 40 different phone calls from solicitors. That's part of this system. So if you want to elect not to get those calls, check out this and please sign up for that before you go to the next step. So my name is Dan Frio. We have a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. So how do we do that? Well, folks, I work at a federal bank. So that means I'm federally licensed. The next thing is our federal bank is set up with 33 other lenders. You might ask, why? Okay, great question. Well, the reason why is we're trying to help you guys out. So what are you looking for when you're watching this channel or any other channel with mortgages and so forth? You want direction on where to go. So most companies will tell you, well, go out and get 3, 4, 5 different quotes. I'm telling you, don't. That's old school. Why don't you just use our systems? Here's what our system does, and you can check us out every Wednesday. We do a live event to show you behind the scenes how this works. So check out last week's video. But what we do is we put in your application. We have the ability to work with 33 other lenders. Think of them as part of our bank, I guess is the best way to put it. You'll work with me during this whole transaction. So if you want to find out more about that, go to the rate update. But there's a lot more on our website, folks. If you're looking to buy right now, check out this video. Right through here. You might qualify for up to $7,000 in assistance. If you're looking to refinance and just like, Dan, I need some help with this, click this button right through here. Put in the rate that you have on your current mortgage. What rate would it take to get you to refinance? When that rate hits it, I'll be giving you a phone call. We'll talk about the numbers. I'll explain to you how to do this. And if you like it, we'll move forward. But also we have a loan estimate. Let's say you already got 1, 2, 3 different quotes. Pick the best one. Then upload it into this website right through here. It's called the Loan Estimate Review. What I'm going to do is I'm going to review your loan estimate, the estimate you got from your lender, with 33 other lenders. Let's see if we can get you a lower rate, maybe lower fees, maybe all the above. You might luck out and get a big savings on rates and also fees, and that's what's happening to most people. So if you want to check out my services, just go to therateupdate.com. We will be live today around 2 or 3 o'clock. I'll give you a precast of what's coming down the pike next week. We're starting to do this on Fridays, so I want to explain to you the economic news coming out next week that will be affecting these things over through here. So thanks for watching this morning, guys. God bless. If you need some help buying or refinancing, I'd love to be able to help you. So just reach out to us. All the information is at therateupdate.com. So have a fantastic afternoon, folks. Be safe, and I'll be here live at 2 o'clock to explain what's going on next week, why, and how that will affect these things over through here. Thanks. God bless. See you later. Bye-bye.